Welcome back to Market on Close. 15 minutes left in the session. Stocks are near the highs. Let's bring in Scott Bauer joining us, the CEO of Prosper Trading Academy. So, Scott, it seems like the old Powell is back. He talks and the magic moves market. Stocks higher, bonds higher, gold's higher. The everything trade from Monday is back.
All is well. All is well, right? Just, buy into the marketplace, buy anything you can get your hands on. I mean, it's actually incredible to me, Oliver. The reaction in the marketplace today. Yes, they said that they will do whatever they absolutely can do to backstop the market for as long as they need to do it. We know that. However, to me, and I'm not trying to be pessimistic at all. Number one, the concern about the virus, about the pandemic, is first and foremost, just as it should be for the Fed, as it is for everybody else. So Powell even said, we don't know what's going to happen with this. Number two, and I'm going to read this here because I want to get this quote exactly correct.
Okay.
He says, there's nothing that's going on in the markets right now that raises any concerns. Okay. And that was in reference to keeping repo operations open and liquidity swaps. I mean, there is something going on in the market right now. And I'm not trying to say something different than Chairman Powell said. But they also said, besides the path forward being incredibly uncertain, consumer spending is down since the reopening is halted. They've seen that over the last 4 to 6 weeks. We're getting economic data. We'll get GDP tomorrow that may be the worst on history that we've ever seen. So when this rosy picture is painted out there because the Fed is backstopping the world, or I should say the economy here, it just doesn't sit right. However, the reality of it is, when and how do you fight the Fed? So there's this tug of war going on right now between the real data out there and the markets. And at some point, it's going to break. I don't know if that point is a week, a month, a year, 10 years. At some point, it's going to break.
Yeah, I mean, that's what we're talking about with Jim at the top of the show right now. Bonds totally quiet. They got a little bit of a bid here, but even when they rally, we haven't been able to get back to the March lows in yield, a high in price, and it just seems like there's a lot of things going on that are shifting the economic expectations over the last 3 months. They've gone up, and then they came back down over the past month here. But throughout that time, bonds have done nothing, right? What I think is also interesting is, it could be crazy, but from what I see, no follow-up to the last meeting in which he hinted at keeping zero rates through 2022. So, the timeline there, I guess it's outcome-based or timeline-based what they do. I'm not sure, but it seems interesting that they're not reiterating that language.
Well, other than the fact, and I think he repeated this intentionally 3 times, that we're not even thinking. We're not even thinking. We're not even thinking about raising rates. I think that, that says everything right there. So, yeah, is it going into 2021, or like you said, is that going all the way out to 22? Who knows? But they have made it abundantly clear that the Fed will will print money as much as need be possible to backstop this economy, to backstop our life, lifeline here until the pandemic is over with.
Yeah. All right. So maybe then the timeline changes depending on how the pandemic goes. But that's the point, really, is we're stuck in this. We don't know where the out is. There's hopes for the vaccine, but even then, we don't know how it's going to work. Will it be as effective as a typical flu vaccine? All the stuff, that we debate every day. Scott, in the meantime, the market is getting pretty interesting, where it seems like some of that outcome is being envisaged by gold breaking out. We know also the dollar breaking down. You're pretty much getting more of that again today. Do you need to pick one of these asset classes, or will it be like 2019 where everything goes up together? I mean, we're getting a taste of that here today and Monday, but last time around the dollar was up too, and that's not happening this time. So it seems like by that conclusion, there could be other parts of the everything trade that go missing.
Listen, I've been very vocal, and I have been wrong. I'm the first one to admit it. I've been wrong about the call on gold over the last week. I've been bullish up until the last week, and you and I have
Right.
discussed it, and I've discussed it that I've been buying put spreads short term, and I've been wrong on that, and that's fine. But how does everything continue to move like this? I don't think it can last forever. I don't think it can last beyond a couple weeks from now, to be quite honest with you. And maybe, just maybe, tomorrow will be the defining point when we get the earnings reports out of the big fangs, out of big tech. If they're good, if they blow the doors off expectations, then yes, maybe we can continue. If they don't, though, we're going to see some profit taken really quick. To me, though, Oliver, the overriding one data point that I have my summer, if you will, focused on is next Friday, a week from Friday, and that's the July jobs data. I truly believe that we're going to see such a weak number because of the shutdowns, because of, as we've spoken before, that June number, which was so great, did not include the last 2 weeks of the month, which included shutdowns. That, to me, could be a real wake-up for the marketplace.
Okay. Scott, good conversation. Thanks for joining us. Always like the transparency on what you're trading and how you're thinking about markets right now. Scott's the CEO of Prosper Trading Academy.